Right. Okay, Lamai, can you hear me? Good afternoon, everyone. Lamai, hello.
Good afternoon, sir.
Good afternoon. Sitma, can you hear me? Sandil, Lamai. Okay, right. Right. Foreign exchange market. This is the last part of unit number 10. Last part of unit number 10. Balance of payment. Sorry, balance. Unit number 10 is balance of payment and forex market. Forex market means foreign exchange market. Good evening. Yeah. Foreign exchange market. Yes, we have completed balance of payment. Today, my focus is to complete forex market, right? Okay. Right. Foreign exchange market. I think you can. This is foreign exchange market. Lama, this is very small lesson, not big one, but tricky, right? Even though it is small, you know, there are some points which are, bit complicated and need some time to understand, Lama. Okay, right. Foreign exchange market or forex market, right? To start off, let's discuss foreign exchange rate, Lamai. Foreign exchange rate, right? Lamai, this is also market, so you can have very small idea. This is also market, Lamai, right? This is also type of market, right? Now, what is mean by a market? Yes, what is mean by a market? Tell me. What is mean by a market and what's happening there? Hmm?
A place where we do
Give me 1 minute,
buying
Sitma.
and selling.
1 minute, okay. Okay, now you can say. Yes, Buddha. What did you say?
A place we can do buying and selling.
Yeah, place where buyers and sellers meet together. That is a simple idea, right? Forex market is not forex market. Market is any place, right? Any place. It can be either virtual or physical, right? Place where buyers and sellers meet together. They join together to exchange something. That mechanism, that well established, well organized mechanism is called a market in economics. Market. So that there are several types of markets, right? In the economy, we can identify different types of markets. I think I might have explained this one. Okay. First one with the goods and service market. Goods and services. Goods and services market. Here, Buddha, buyers and sellers meet together to exchange goods and services, right? To exchange what? Goods and services, right? We have, uh, already completed these points. We are, expert in this lesson, Buddha, right? Demand and supply, everything. Equilibrium price, quantity. How do they change equilibrium price, quantity? Government intervention, taxes, subsidies, price control policies. You're expert. Right. Goods and service market. Then the other one is labor market. Labor market. Sorry. Yeah, labor market. Labor market means it's also place, Buddha. The place where buyers and sellers meet together. Especially Buddha, here the purpose is to exchange labors. Simple idea. Labor market. It is a the organized mechanism where labors are supplied and demanded. That is a simple idea, right? So equilibrium price is called wage rate, right? Labor market. Then lamai we can say another one, share market. Very famous one, share market. Then Buddha, you can see the word market. You can see the word market. If you see this word Buddha, what comes to your mind instantly? It's a place where where buyers and sellers meet together. Here Buddha, share market. Share market means it is a place where the buyers who are willing to buy shares of companies, right? Shares of companies, listed companies, and we can say Buddha, the companies which want to sell their shares to raise capital. That is called share market. Place where buyers and sellers meet together to exchange shares of companies. That is called share market, right? Another one, let's say treasury bills and treasury bonds market. We've completed that part, right? Treasury bills and treasury bonds. Treasury bills and bonds market. Bonds, or we can say the government security market, right? Here also you can see there is a market part. Market means buyers and sellers meet together. Here buyers and sellers meet together for what, Buddha? To exchange government securities, or we can say treasury bills and treasury bonds. Treasury bills and treasury bonds. Then Buddha, our topic is share market. I'll use capital letters. Share, it's not share market. Forex market. Forex market. Then Buddha, you can see market is there. Market, you can see this word market. Market is there. It means Buddha, buyers and sellers meet together. Buyers and sellers meet together. For what? To exchange something. Here, what is exchange, Buddha? Forex. Forex means Buddha, currencies of countries, right? Different currencies. Forex mean what? Forex means foreign currencies. Forex mean foreign currencies. Forex mean foreign currencies. Forex mean foreign currencies. Very simple, Buddha. Forex market is the place where buyers and sellers meet together to exchange, to buy and sell foreign currencies. Dollars, might be sterling pounds, right? Not only goods and services, but also we need foreign exchange as well, because this is 21st century, right? We have to, every country has to make transactions with rest of the world, so we need foreign currencies, right? So there should be a proper and well established, well organized platform to exchange these foreign currencies. That market, that place is called foreign exchange market or forex market. Very simple, Lama. Take it simple, right? Forex market or foreign exchange market. So here Buddha, remember what is exchange there? Foreign currencies. So some people are coming to foreign exchange market to buy foreign exchange, right? And some people come into the foreign exchange market to sell their currencies in the foreign exchange. Okay, this simple platform is called foreign exchange. Very simple, Lama. Take it simple. Then Buddha, every market has demand and supply force. Every market consists of demand and supply. This is also market, Nilama. So forex market also consists of demand and supply. Everything depends on that demand and supply process. Every currency has its own demand and also supply. Based on that demand and supply, that foreign, I'll be explaining that point. Don't worry. This is a simple idea for foreign exchange. Any doubt, Puta? Yes. Any doubt? Sandil? Sitma? No problem. Right. Remoni, we are doing foreign exchange market. Last part of the unit number 2, unit number 10. Okay, Dalama. Right. Thank you. Okay, foreign exchange market. Then Buddha, foreign exchange rate. Very, very simple, Buddha, right? How many times we have heard this? Foreign exchange rate. Dollar is this much. Today, dollar rate has, value of $1 equals 350 rupees. What does city government is doing? Sri Lankan rupee appreciating. Okay, the lamai. And that depreciating foreign Sri Lankan rupee makes imported goods very expensive, right? Causing or resulting cost push inflation in the country. Okay, the lama. You might have heard these points. Okay, the lama. Foreign exchange rate. What is foreign exchange rate? Very simple, lama. This is a simple definition. Foreign exchange rate. Simple way we can say, Buddha, the price of or value of one currency in terms of another currency. Price of one currency in terms of another currency. Okay, the lama. Right. Foreign exchange rate. Put a star mark and write down, lama. First definition also okay, no problem. This is a very detailed and simple one. The rate at which 1 unit of domestic currency is converted into unit of foreign currency, or rate at which unit of foreign currency converted into domestic currency shown as foreign exchange rate. Right now, this is very famous and the simplest definition. Write down the value of one currency, the value of one nation's currency, one nation's currency in terms of another currency, okay, the lama. Our currency is Sri Lankan rupee, USA currency is US dollars. Then there should be a rate. Remember, Buddha, price of one currency can be expressed in terms of another currency. Right? If you want to compare two currencies, Buddha, example, US dollars and we can say Japanese yen or sterling pound, right? What value of one currency should be given in terms of another currency. Otherwise, we can't compare. That is the only way that we have to compare or to express price of one currency in terms of another. That is called exchange rate. Okay, the lama, in terms of another currency. Okay, the lama. Right. Example, currency. Right. Put that this is called external value. With in bracket, write down this one also. External value. External value of the domestic currency unit. Domestic currency unit. External value of domestic currency. That is called foreign exchange. That is called foreign exchange rate. External value. Put every currency has external value and also internal value. Can anyone tell me, Buddha, what is internal value of domestic currency? Internal value. There are two values: external value and internal value. What is mean by internal value of domestic currency? Can anyone tell me? Unmute the microphone and tell me, Buddha. What is mean by internal value of domestic currency?
purchasing power of a
Very
currency.
good. Purchasing power. Very good. 100% correct. Perfect. Purchasing power of. Very good. That one also correct, Sandil. Goods and services. How many, goods and services can we purchase for given amount of money? That is called internal value of a domestic currency. Okay, the lama. 1,000 rupees the nominal value, right? Right. If you internal value mean if you are given particular amount of money, okay, the lama, 5,000 or 1,000, the internal value of that amount, the money is the value of goods and services that you can purchase for that 5,000 or 1,000 rupees. That is the internal value. External value mean Buddha, how many dollars or sterling pounds you can purchase. Okay, the lama. Example, if you are given 1,000 rupees Buddha, if you go to the foreign exchange market and buy for dollars, you can buy say $3, right? More or less $3. Okay, the lama. That is the external value of 1,000 rupees or external value of domestic currency. Okay, right. Yeah. Okay. Right. Then Buddha. Next one. Okay. There are two ways of expressing foreign exchange rate. Write down to the. These are called the quoting methods. First one, write down direct quoting system. Oh, this is called direct method. So that there are two ways of expressing foreign exchange, right? Quoting, quote, direct method. Direct method. Second one, Buddha, indirect method. Second one is indirect method. Indirect method. So this is called indirect quotation system. Okay, the lama, direct and indirect. So these are very simple. This introduction part is very simple. Everyone knows that introduction part, right? When I explain, this concept one time, Buddha, you can quickly get it, okay, into your mind. No problem, right? No need deep explanations, right? Direct, indirect, right? Then put that direct quotation or direct method, expressing the value of foreign currency, lama. Expressing the value of foreign currency in terms of domestic currency is the direct quotation system. Okay, the lama. Value of foreign currency in terms of domestic currency, right? Look at the board. Look at the board, lama. Direct and indirect. Direct method means value of one foreign currency, lama. Dollar mean foreign currency, right? $1 for value of one foreign currency in terms of domestic currency. Our domestic currency is LKR. I mean, from Sri Lankan point of view, this is called direct method. Value of one foreign currency in terms of our currency or domestic. This is called direct method. 1 sterling pound equals, let's say, Buddha, 400 rupees LKR. Right? Sterling pound mean, the currency of the UK. Right? So the price of one foreign currency, UK sterling pound, equals 400 rupees. Okay, the lama. Then one Japanese yen equals 4 rupees, 4 LKR. Okay, then 1 euro, right? Price of 1 euro is mean price of foreign currency. Euro mean domestic, foreign currency in terms of, I don't know how much the value, maybe 270 LKR. This method is called the direct method. Indirect method mean value of one domestic currencies means Sri Lankan rupee, right? Indirect method mean, remember Buddha, both are important, right? This is the, this is, we know, everyone knows this method now. Normally we use this method, right? And dollar එක කීයද කියලා කොට පස්සේ 300 400 ඒ කියන්නේ ළමයි direct method. අපිට ගොඩක් අර family direct method. නේද ළමයි? හරි. හැබැයි indirect method ගොඩක් වෙලාවට ළමයි decisions making වලදී ඊට පස්සේ ගොඩක් analysis වලදී අපි use කරන්නේ indirect method. Clear? There are two methods, remember. Not only direct, there's another method, indirect. Okay, the llama. Right. Indirect means that the value of domestic currency. 1 LKR equals how much of dollars now? So that this is calculated reciprocal of direct method. Here $1 equals 300 rupees, reciprocal 1 over 300. Then how much the value, Lama? Can you tell me? 0.003 dollars. What does it mean, Lama? The value of 1 LKR domestic currency in terms of foreign currency. Value of domestic currency in terms of foreign currency. Okay, the Lama. In a simple idea, Buddha, if we go to the foreign exchange market and if we give, right, if we give 1 Sri Lankan rupees to the foreign exchange market, in return we can buy only not $1, $0.003. That is the idea, right? This is called indirect. This is called direct. Direct method means the value of one foreign currency in terms of domestic currency. Indirect mean value of one domestic. LKR mean domestic nilama. LKR domestic currency in terms of foreign currency, because $0.003 means foreign currency. I think you're clear with this. And remember, Buddha, indirect method is the reciprocal of direct method. Any problem? No, these are simple, Lama. Okay, right. Read this one. Look at the direct method. Okay, Lamai. Then how many rupees are needed to purchase one US dollars? That is okay. $1 equals 300 rupees. Indirect quotation means the expressing the value of domestic currency 1 LKR in terms of foreign currency is indirect quotation system or the value system. Putha, this is called volume quotation. Remember, this is called volume. Quotation. First one is called price quotation. First one is called price. Okay, the lamai. Right. System. Right. That is okay. Example, write down how many dollars are needed to purchase one Sri Lankan. Write down 1 LKR equals. How to calculate, lamai? 1 LKR equals, write down 1 LKR Sri Lankan rupee equals how much, lamai? $0.003 dollars. How to calculate this? How to calculate 1 over 1 divide by, oh, that sign, lamai. Have to use 1 over 300. Reciprocal of direct method. Okay, the lamai. Shall we move on? Lamai, shall we move on? Hello? Done? Finish writing?
Yes, sir.
Okay. Right. Next one, Pudha, exchange rate systems. Now the lesson, is going to be a bit complicated, Lamai. Right? We are going to go deep. Okay, the Lamai. Right. Foreign exchange rate system. Are not much complicated, Lamai. But you can't blindly memorize, Lamai. Right? You have to be logical. Okay, right. Exchange rate systems. The method in which exchange rate of currencies decided tends to differ from country to country as well as periodically. The following can be identified as the main exchange rate system. The exchange rate system, these are called exchange rate regimes as well. Remember that name also. Exchange rate regimes. Mahinda Rajapaksa's regime. Okay, one side of one political ideology. Okay, the Lama regime. Right. Exchange rates regimes. Simple idea, Buddha. Regime mean or foreign exchange rate system mean who decides the foreign exchange rate. Now, Buddha, the Sri Lanka, if you go to the foreign exchange market, you can say $1 equals this much, 300 rupees, 400. Then who decides this, Lama? Who is responsible to set this rate? Then country to country, Buddha, that system differs. Okay, the Lama. Some countries use another system, example, right? Like there should be a system or a proper platform in which foreign exchange rate is determined. Okay, the Lama. Foreign exchange rate is determined. Okay, right. Write down, Buddha, there are 3 systems in the world. Actually, Buddha, there are 5, but in your level, we discuss mainly 3. First one, write down flexible, or this is called free floating. Flexible or free floating. Flexible or free floating. Free floating. Free floating. Free floating means no government intervention. Okay, the Lamai. Floating, free. Floating, what type of floating, Lamai? Free floating. Right? Floating exchange rate system. Rate system. Second one, free floating. Second one, fixed exchange rate system. Fixed exchange rate system. Okay, my third one, managed floating. Third one is managed floating exchange rate. Managed floating. Managed. Managed floating exchange rate right. Okay, the managed floating exchange rate. Okay, the these are the 3 XA exchange rate regimes or systems. Right. Okay, Buddha, we'll discuss one by one. First one, freely floating exchange rate system. Buddha, this is a very common one. Okay. I would say Sri Lanka is a type of freely floating exchange rate system country. Time to time it changes, Buddha, but mainly we focus as a country, we focus on freely or freely floating or that is a flexible exchange rate system, right? The freely floating is very simple. The idea is government does not intervene in this market. Exchange rate is determined by demand and supply forces. That's it. Every currency has demand and also supply. Can you remember equilibrium price, Lama? In the goods and service market, the price of the good, selling price of the good or equilibrium price is determined by demand and supply forces, Lama. Right? Without government intervention, Lamai, every market is able to, right, set an equilibrium price for the product, Lamai. No problem. Without government intervention, same idea, Buddha, based on demand and supply of foreign exchange or foreign currencies, there can be an equilibrium rate for that currency that is called freely floating exchange rate system. Here, without government intervention, Buddha, demand and supply forces determine the exchange rate, right? $1 equals 300 or $1 equals 400 rupees. That rate is decided by demand and supply forces. That's a simple idea, right? Put a star mark and write down freely floating exchange rate system. Write down. Write down a flexible exchange rate system. A flexible exchange rate system where the nominal exchange rate, but I forgot to tell you, this normal exchange rate is called nominal exchange rate. It's $1 equals 300 rupees, $1 equals 400 rupees. If you Google and if you go to the exchange market, you can see a particular rate. If you go to especially commercial bank, you can see the screen. Okay, the Lamai. You can screen that is smart digital screen showing exchange rates with the daily exchange rate, right? $1 equals this much. That is called nominal rate, Lama. NER, nominal exchange rate, right? Flexible exchange rate system where the nominal exchange rate, put that within bracket, write down. This is called NER. NER means normal, the exchange rate we know, right? NER decided or determined, decided based on the interaction of demand and supply forces, demand and supply forces for a particular currency, relative to other currencies within foreign exchange market, in foreign exchange okay, this is called flexible. Here the main point is, Buddha, remember, exchange rate decided or determined based on interaction, highlight this part, interaction based on the interaction of demand and supply forces. No government involvement. That is a simple idea of foreign freely floating or flexible exchange rate system. Okay, that is why we use this word for the floating, freely floating. Freely floating mean that floating is free. No dirty, no government involvement. That's it. Right? Demand and supply forces of the currency decide the rate. That's called freely floating exchange rate system. Here, no government involvement. Okay. Right. Demand for foreign currencies. Then, Buddha, we have to discuss because this rate is decided by demand and supply. So, Buddha, this part is really critical, I would say. Right. This is really critical point. Right. This is the heart and center of the lesson. So, please don't do anything. Please pay your attention on this point, Lamai, right? Demand and supply. Okay. Right. Demand and supply. Buddha, I'll take the dollar, US dollar, because it's very common and we know that very well. Okay, so I'll take as an example, Buddha, I'll take the for a dollar rate, the dollar, US dollar, right? Okay. Demand for foreign exchange. Here, foreign exchange mean, Buddha, as example, I'll take dollars, USD, USD, right? Dollars, right? My next question, Lamai, who is demanding dollars, Lamai? Forget this definition and everything, Buddha. Just try to be practical. Sandil, tell me who is demanding, who needs dollars, who is going to the foreign exchange market and demand dollars, Lamai? Tell me. Central bank, okay, right? Who else, Lamai? Only central bank? But I don't expect you to answer perfect, perfect and 100% correct answers. No, I'm asking what you know, right? What do you know? Buyers and sellers. No, I'm asking, yes, buyers and sellers. Who really wants dollars, Buddha? Who wants to buy dollars? Right. Example, assume, Buddha, after A level, Sitma has decided to go abroad for higher studies. Then, Buddha, Sitma has decided to go USA, to the USA. Then, Buddha, at the point of leaving the country, Sitma needs dollars, Sitma. You can't spend Sri Lankan rupees in the USA, right? So, when you want to go at the point of leaving the country, right, you have to buy. Look at that point, Buddha, you have to buy dollars. You have to buy dollars. It means, Buddha, Sitma has to go to the foreign exchange market. It might be a commercial bank, right? It might be that there's another, the Colombo port and this Bambalapitiya, Vallavatta. You might have seen that foreign, the centers that urgents, right, who buy and sell foreign currencies. The what is called? Buddha? There's a great name for that. Those shops are called. Can anyone remember? Especially the port, Vallavatta, Bambalapitiya, very famous for these places now. Foreign, can't remember that word. In other countries, it's very common. Everywhere it's available. If you want to buy foreign exchange for the dollars, whatever currency, you have to go to foreign commercial bank. But Saturday, Sunday, commercial banks are closed. So if you want to buy it immediately, you have to go to such places. They are called mostly with the Tamil and Muslim people, engage with this currency trading. I can't remember that name. Right, anyway, right. Okay, the Sitma has to go to such a place, either bank or such a place to buy foreign car. Now you can see we can say puta Sitma is demand in dollars. Sitma is demand in dollars. What is the purpose puta? To migrate, right? When going to another country puta, we need to buy. Buy mean demanding, right? Right? We demand dollars. Puta, another reason is assume Sandil wants to import some goods from the USA. That we can't make the payment in Sri Lankan rupees. Can't make the payment in Sri Lankan rupees. We have to make the payment in dollars. We don't have dollars for that. Then Sandil has to go to a foreign exchange. Foreign exchange market means practically we have to go to the commercial bank or to another shop that's selling foreign currencies. Engage with trading foreign currencies. I'm still thinking of that name, Lama. They are dealers, Lama. Right? The central bank has given the authority, license. They have a license. Right. Anyway, okay. Another point where we demand dollars or foreign currencies is, to import goods. Import goods from other countries, with the USA or another country. We need to have dollars. Then we go to the foreign exchange market and we buy dollars. Right. I'll tell another point, Lama. Then I'm talking about reasons to demand dollars, Lama. Why? Who are demanding dollars and what are the purposes? Right? Right. Demand for dollars. Demand for dollars. First one, Buddha, we demand dollars to import products, Lamai. To import goods and services both. Goods and services. Okay, the Lamai. Second one, we can say, Buddha. Another one, Buddha, when we make payments, loans, right? Example, the Sri Lanka wants to pay loan installment to IMF or let's say USA, Lamai, right? When making that payment in the loan repayment, Buddha, we have to do it. We have to make that payment in dollars, not in Sri Lankan rupees. We don't have dollars, Lamai. Then we have to central bank or government has to go to the foreign exchange market and has to buy dollars. Another point, Lama. Repayment of foreign loans. Repayment of foreign loans. Repayment of foreign loans. Then Buddha, when to migrate, to spend money in their countries, Lama. In other foreign countries, we need to buy foreign exchange. Okay, the Lama. This is called demand for dollars, Lama. These are the reasons why people demand dollars, Lama. Right? Can you read the definition given? Read the point, Lamai. The demand of foreign exchange is mean dollars comes from those who need it to make payment. Okay, the Lamai. People who need it to make payments in foreign currency. Example, lamai, to import goods. These are the reasons, lama. Example number one, import goods and services. Of course, with absolutely we need foreign currencies. Tourism, travel to other countries. Yes. Unilateral transfer sent abroad. Don't worry about this much. That much. On third one. Purchase assets in foreign countries. Example, Buddha, one Sri Lankan wants to buy shares of Apple Corporation. Okay, the lamai. Foreign shares or securities from USA, lamai. Right? US government securities. Then, Buddha, we have to make that payments in dollars. So we have to demand dollars to pay debt, to repay debit or debt. Okay. Next one, to pay interest for borrowing. Simple. Okay, this fifth and sixth are connected with loans, with the loans repayment. These are loan repayments. I would say loan repayments. Sorry, loan repayments. Loan repayments. Fifth and sixth one are connected with loan repayment. Okay. Right. Next one, demand curve for foreign exchange. Right. Our currency is dollars. Can you read that part before we move into supply of dollars? Demand curve of foreign exchange slopes downward. Normal demand curve. Can you remember that normal shape of the demand curve? Normally, Buddha, demand curve is a downward sloping curve. Same demand curve, Buddha, right? Due to inverse relationship between demand and foreign exchange rate. I'll explain this part. Right. Right. Look at the board. This is the demand curve for dollars, Lama. Demand curve is normal downward sloping curve, Lama. Demand curve is normal downward slope. Here, Buddha, here not the goods and service market. What is this market? Foreign exchange market. So here quantity, yes, quantity of dollars, Lama. How many dollars are being exchanged in the market, right? Quantity of foreign exchange or dollars. Here, Lamai, price tamai, normal price axis tamai, but here, Lamai, price of $1, price of USD in terms of LKR. Remember, price of one currency can be expressed in terms of another currency, Lamai. Remember, price of one currency can be expressed in terms of another currency. Here, price of dollar in terms of LKR, right? Okay. Right. Assume, Lamai, now price of dollar in terms of LKR. This is demand for US dollars, Lamai. Now assume $1 equals 300 rupees, right? $1. Here price mean put the price of $1 in terms of LKR. Is concentrate, Lamai. This is the heart of the session. Okay. If you get the idea of demand, supply, and equilibrium rate, almost done. The late lesson is almost done. Other parts are very simple. Okay, the Lamai. So don't do anything, right? Anything, please listen, right? Price Assume 300, $1 equals 300 rupees. Now, Buddha, in the market, assume $1,000. These are units, right? 1,000 units. 1, 2, 3, 5. 1,000 unit. $1,000 are being demanded. $1,000 are being demanded at 300 rupees. Now, Lamai, who are demanding this $1,000? Tell me. Who is demanding this $1,000, Lamai? Tell me. Might be the people who want to migrate. Might be importers, Lamai, because they need dollars to import goods and services, right? Maybe government or central bank to pay debt, right? The foreign debt. Anyway, Buddha, government, businesses, right? The households, right? All these economic units are demanding $1,000, right? Government says, I need $200 to pay loan. Okay, Dulamai. Another businessman says, I need $50 to import goods. Another student, says, assume I need $100 to go to the USA. Anyway, Buddha, now in the market, $1,000 are being demanded at 300 rupees. Now assume, Lamai, next day price of $1 increases to 350. Now dollar is expensive in terms of Sri Lankan rupee. Why? To buy $1, same dollar, we have to pay 350 rupees. Which means that the price of dollar in terms of LKR has become expensive. Right? We have to pay, Sri Lankans have to pay a higher value or the more rupees to buy $1. Sandil, tell me now, will people demand more dollars or less dollars now? At 300 rupees, $1,000 are being demanded. Remember, before people demand dollars for that, they look at the rate, right? They closely look at the rate. Based on the rate, they decide, okay, I need $200, I need $300. Okay, Dalamai. Now price is 350. Now tell me, Buddha, importers, okay, Dalamai, those who need to migrate, right? Would they demand more dollars or less dollars, Lama? Less dollars. Very good. Low, because price is expensive. Dollar has become expensive. Assume, Lama, $8 are being demanded. Normal demand and supply, Lama. Right? Assume, Buddha, next day, dollar is 400 rupees. One price of $1 in terms of LKR is 400 rupees. Now, yes, definitely, Buddha, demand for dollars will be lower. Assume it's $600. Okay, the Lama. If you plot these points on the diagram, Buddha, you will have the curve, downward sloping demand curve. Right? This is the demand curve. This is the demand curve for dollars. D dollars. This is not demand curve for goods and services. At price $300,000 are being demanded. Price 350, $800 are being demanded. At price 400, $600 are being. Any problem? This is the normal demand curve. Demand curve for dollar is down. I mean, any foreign currency is a downward sloping demand curve. Downward sloping due to inverse relationship. The price of foreign currency increases for price of foreign currency in terms of our currency. As I told you at the beginning, Lamai, price of one currency can be expressed in terms of another. There is no way to express value of one currency. Okay, the Lamai. So there should be a comparison. Price of one currency need to be expressed in terms of another. Otherwise, no any method. Okay, the Lamai. Right. If you want, write this down. This is the demand curve for dollars. 1 minute, please. 1 minute, please. Don't write it. Please, Lamai. Look at the board. Listen. Remember, Lamai. When we demand dollars, this is really important point, right? When we demand dollars, Example lamai, assume Sandil needs $200. Right, okay. Assume puta now $200, price of $1 is 300 rupees. Then 300 into 200 means 60,000 neda lamai. Sandil need $200. Price of $1 is 300 rupees. 60,000, yes. It's mean Buddha Sandil needs how much? 60,000 LKR to buy these $200. You can't buy, Sandil can't buy dollars without paying lamai, right? So remember, when we demand dollars lamai, right? When we go and buy dollars, we have to supply LKR to the market lamai. I'll repeat. When we go and ask dollars from the market, lamai, when we buy dollars from the market, we have to pay in Sri Lankan rupees. In other words, the Sri Lankan rupees are injected to the market. Okay, the lamai. Sri Lankan rupees are given to the market at the point of demand in dollars. So remember, lamai, dollar demand for dollars. Right? Demand, quantity demand, USD quantity demand lamai. Demand for dollars equals supply of LKR. Supply of LKR. මම මේ clear ඇති කියලා ළමයි. අපි dollars ගන්නෙ අපේ currency එක market එකට දීලා ළමයි. It's like a barter system ළමයි. Think of two goods for the, if you want to buy something, you have to offer another thing. Okay, the ළමයි. We buy dollars by giving Sri Lankan rupees to the market. Sri Lankan rupees are injected to the market. It's a supply of Sri Lankan rupees. Are you okay with this? Right? Once US dollars are being demanded, lamai, we have to supply QS, Sri Lankan rupees, to the market. Any problem, lamai? Yes?
No, sir.
No. Right? Right. Can you write down this one? No, it's okay. Here, the demand curve of foreign exchange. Here, you can draw the demand curve. Okay, the lamai, price, quantity. The remember, in foreign exchange market, this price and quantity axis must be properly labeled. Okay, the lamai, you should have very good understanding to label these axes, lamai. Right? Here, price mean price of one currency. My example, price of one US dollars. Okay, the lamai. So that this lesson is simple. Too small. Is small. 2 days enough. Okay, the lamai. But I need another day, 2 hours to complete past papers. But very tricky, lamai. If you understand the lesson, it's wonderful. Okay, the lamai. But if you don't get the real idea, right?
Sir, could you please share the whiteboard?
Okay. Remember, lamai, this is also price axis. Same like demand and supply lesson. This is price axis. But here, price of one currency in terms of another currency. Here, quantity, but quantity of dollars. How many dollars are being, units of dollars are being demanded, lamai. That is the point, right? Quantity of US dollars, not Goods and services, 60 units, 50 units of rice or coconut, no. Ramon, if you have any doubt, please let me know. But remember, this relationship is really important, right? Once we demand dollars, we supply Sri Lankan rupees to the market. Right, Lama, shall we move on? Done? Amai, are you okay? Done?
Done, sir.
Okay. Sandeep, sorry, Remoni. Okay, right. Next one. Supply of dollars. Supply of. Pudha, we can read this note as well. Can you read this one? Page number 3. Right. Page number 5. Demand for dollars in turn creates. Remember this one, as I told you. Demand for dollars in turn creates a supply of Sri Lankan rupees. LKR supply equals USD demand. Right? The foreign currency dollar demand curve is downward sloping from left to right as usual. Since as the price of dollar decreases, dollar becomes cheap other way, right? When price of dollar decreases in terms of Sri Lankan rupee, we demand more. Dollar becomes cheaper relative to domestic currency rupees. The demand, domestic demand for dollar increases. Okay, the line, right? Alternatively, about reasons for demand in dollars create supply of Sri Lankan rupees. You know this point, mainly due to demand made by Sri Lankans to pay for imports and outflow of capital to invest in other countries. Buying shares, Lamai. These are the the places, the transaction which create demand for US dollars. Imports are done by supplying and buying dollars. Yes, when the dollar value of rupee increases, the same thing, Pudha, right? Same thing. Explains. Finally, we can say Pudha, demand curve of dollar or foreign currency is a downward sloping curve, right? Okay. Next one, supply. Right. My next question, Lamai, who supplies dollars to the market, Lamai? Hmm? Who brings dollars and put into the foreign exchange market, Lamai? Who are the people bringing dollars right? Carry dollars to the market and demand Sri Lankan rupees. Remember, when dollars are being supplied to the Sri Lankan rupees are being demanded. Okay, Rama. Who brings dollars to the market? Who brings dollars into the market? Yes. What is their purpose, Buddha? They want to buy Sri Lankan rupees. That's why they are supplying dollars. Who are the suppliers of dollars, Lama? Yes. Suppliers of dollars mean there are some people who wants to buy Sri Lankan rupees, Lama. That's why they go to the market and supply dollars. Who are the suppliers? Number one, Buddha, assume US people, right? A group of US people wants to come into Sri Lanka for 1 week holiday vacation, right? Sitma, can you tell me, Buddha, can they spend US dollars in Sri Lanka, inside the Sri Lanka? Yes, inside Sri Lanka. Can they spend dollars? No. Then Buddha, they need to have Sri Lankan rupees. Then Buddha, they have to buy Sri Lankan rupees. Okay, they go to the foreign exchange market and demand in Sri Lankan rupees, LKR. Give me 100,000 LKR, 200,000 LKR. That is a supply of, sorry. Then Buddha, when demanding Sri Lankan rupees, they have to supply. They can't buy Sri Lankan rupees without paying Buddha. They have to pay. In which currency? Their currency. Their currency means. Okay, the number. They might, demand 5 million Sri Lankan rupees, 5 million Sri Lankan rupees by supplying, I don't know, 200 or $300 to the market, right? Supply of foreign exchange from those people who receive it due to following reasons. Export of goods and services. Export, example, Buddha, one of you, right? Assume you have $200, Buddha, right? One of your friends has sent $200 to you for your birthday. Assume your relative or, a cousin or someone has sent $200, Buddha. Then you have $200, but you can't use $200 in Sri Lanka. Then what would you do? Go to the foreign exchange market, Buddha. It can be commercial bank or the normal, the trading, that the place where that trading is, trading happens, Lamai. Right, anyway. Okay, then you have to convert dollars into Sri Lankan rupees. Then Buddha, you have to supply that $200 to the market at the point of taking Sri Lankan rupees, at the point of demanding Sri Lankan rupees. Foreign investors, example, Lamai, when foreigners come and invest in Sri Lanka, Buddha, they have to bring their capital in Sri Lankan rupees. They can bring dollars, no problem, but they have to convert it into Sri Lankan rupees at one place, Buddha. Okay, the Lamai, because they can't pay salaries for Sri Lankan workers, so they can't buy raw materials from Sri Lankan suppliers using dollars, Buddha. They have to convert. So foreign investment mean when foreign investments come in, this foreign investment need to be converted into Sri Lankan rupees. When converting this stock of dollars to Sri Lankan rupees, Buddha, dollars are being supplied to the market. I think it's clear for you. Remittances from abroad. Remittances from abroad, right? Example, assume, right, the worker, right, the person working in, let's say, Middle East or USA has sent money to his relatives, $200 or $300. Then finally, Buddha, inside Sri Lanka, we have to convert these dollars into Sri Lankan rupees, right? Then we go to the foreign exchange market and say, I have $200. I need to convert this into Sri Lankan rupees. Okay, the Laman. When converting Sri Lankan rupees, Buddha, you receive Sri Lankan rupees, you have to give that dollar stock, right? That, the dollar, $200 to the market. It's been supply of dollars. I think it's clear. Receipt of primary income, receipt of secondary income, receipt of loans. Even with the IMF loan. But most of the time, IMF loans are given in SDR, special drawing rights. Sometimes it's given in dollars. If we receive dollars, would assume central bank, right? Central bank is given $200 by IMF. Sri Lankan central bank can't use dollars inside Sri Lanka. Then Sri Lanka, the CBSL or government has to convert that loan amount to Sri Lankan rupees. Then central bank goes to the foreign exchange market and converting dollars into Sri Lankan rupees. At the point of converting dollars into Sri Lankan rupees, that $200 have to be given to the market. That is called supply of dollars. Right? Okay. Any problem, Lama? Are you okay with this? Are you clear? Buddha, you need to have more questions, right? Normally, when I do this question, Buddha, my God, thousands of questions asked by students. Yes, it should be. Okay. To be honest, Buddha, during my A-level time, I messed up this lesson. I misunderstood this lesson. Okay, the Lama. To be honest, actually, there's no proper teacher to explain this. I, mess it up. After, several years, I think in university, I, got the real meaning of foreign exchange market, what is actually happening there. Okay, the Lama. During A-level time, Buddha, I blindly memorized some points. Okay, actually, I knew Buddha, to be honest, right? The foreign exchange rate systems, flexible and fixed and managed floating, and advantages and disadvantages of those systems. No any idea, just memorizing. Okay, the number. And also some students would misunderstand. Okay, they know something about foreign exchange market. They are very reluctant to change that. What they know. Okay, the number. Right. If you have any doubt, please let me know. Don't say don't think like, oh, is this going to be a very silly question? No. Sometimes students ask very silly question, but I don't think those are silly questions. That is their, what they know and what they have understood. We have to respect that. Okay, the Laman. Right. Supply curve of foreign exchange. Supply curve of foreign exchange. With a normal supply curve, upward sloping supply curve. Supply curve is normal, upward sloping. Right. Let's talk about supply curve. Right. Assume Lamai now price of $1, price of 1 LKR unit dollar equals LKR. Now it's with the 300 rupees. This is quantity supply. Quantity supply. Okay, the Lamai. Assume Buddha when price is 300 rupees, $1,000 are give me 1 minute, Buddha. There's a question. Are they only exchanged through involvement of central bank or commercial banks? No involvement in central bank. No, central bank does not involve. In some special cases, with the central bank intervention there, but normally if you want to buy and send foreign exchange, foreign currencies, you can go to the normal market. Yeah, market can be any place, right? It can be Example Buddha, if you want to buy rice, you want to buy some vegetables Buddha, you can go to several places, several markets Buddha. If you want to go, you can go to Kargils. හරි එහෙම නැත්නම් ඔය පොඩි මොන හරි අර නේද that the you can go to another small shop selling vegetables මුදලාලි uncle shop okay the lamai otherwise Buddha, you can go to that pola sati pola or some any place. So these are different places where vegetables are sold. You can buy vegetables, same story. If you want to buy or sell foreign currencies Buddha, you can go to maybe commercial bank, but you can't go to central bank. You are not allowed to go there. I can't remember that name Buddha. Not that's this is a dealer. I mean, I'll show you. Give me 1 minute. If better to know. 2022 Buddha, when I went to Qatar, I had to buy Qatar Riyal. Okay, the Lama. During that time, there was a financial crisis in Sri Lanka. So, normal people, the banks issued dollars, but we had to wait. I think only $100 or $150 were issued per week, right? The dollars apply, so the dollar, that available of dollars were restricted by central bank due to that crisis. So I had to go to, I asked commercial bank, NDB bank and Sampath bank, but they said no. Central bank asked us to not to issue dollars, right? Sorry, real or dollar, whatever. Okay, the lamai. So if you want, they said Buddha, if you want to get dollars, you have to wait for 2 weeks. So then Buddha, I went to that Bambalapiti or Vallavato. I'll show. Look at this, Lamai. The Ceylon transfer PETA 2025. Buddha, when you go to that PETA that central bank side, especially that ඔයාලා දන්නවද අර මොකක්ද ළමයි ටෙලිකොම් එක තියෙන්නේ කියන්නේ අපි අර next to the I mean 100 meters 200 meters away from railway station telecom it was Cargill's the head office of Cargill's. I think that Cargill's කියන්නේ ළමයි ඊට පස්සේ BOC head office. When you go there, you can see some, several shops, small shops, buying and selling foreign exchange. There's a specific name for them. I can't remember that name, Buddha. They sell on money transfer location. They have a license. Okay, the Lamai. They have to renew that license every year. They are not banks, just foreign exchange dealers. Has anyone seen this? Bambalapitiya and Vallavatta is very common, Lamai. There are so many places. මේ තියෙන ළමයි JR Forex Exchange, Gold Road Colombo 3. Okay, the ළමයි. These are the places. And you can go to those places and you can buy Buddha, no problem. Right? But their rates are a bit higher than normal commercial banks rates if you want to buy. Amazing lamai. They are called money exchange. I could remember that name. Money exchange. Medin lamai Prasanna money exchange. Right? Best places to exchange money in Sri Lanka. Okay, when you sell foreign exchange I mean they offer different rates. දැන් ගොඩක් කරලා බැංක් එකකට ගියොත් ළමයි අපිට දැන් අපිට ඩොලර් එකක් 310 හරි නම් 300 බයින්ස් රේට් එක selling rate එක sorry buying rate එක 320 නම් ළමයි ඔයාලට මේ exchange rate sorry exchange money exchange එකකට ගියොත් ළමයි සමහරලාට 350 එච්චර නෑ 325 වගේ එයාලා කියන right ඔයා බැංක් එකට යන්න එපා අපි ගාවට එන්න අපි මේ ගාන දෙන්නවා වගේ ඩොලර්ස් ටිකට okay ද ළමයි so the money exchange in other countries is very common money exchange right money exchange places clear the lamai Sandil got no it is another no I am no Sandil I am explaining the how foreign exchange market operates right how demand and supply work yeah I'll explain yeah definitely put that there is involvement right central bank connection is there it is another story central bank controls the foreign exchange market through this acquisition of foreign assets. Nice point. Yeah, I'll explain that point. Yes, that foreign exchange market is directly affected by this acquisition of foreign assets. It's mean the release of buying and selling. Central bank has a role. I'll explain that point. No problem. And now Buddha, just take it simple way. We are explaining how foreign exchange market operates in the economy through demand and supply forces. Are you okay with me? Yes. Right. Okay, the lamai. Right. Then 1 minute, please. Right. I was explaining about supply lamai. Okay. Then 300 at 300 rupees, $1,000 are being supplied. Now, Buddha, price of $1 increases 350 rupees. Clear? It means if you sell $1, you can buy 350. Now, lamai, people try to sell more dollars in the market due to higher price. Okay, the lamai. Due to higher price. Assume lamai $1,500. Now $1,500 come into the market due to higher price because dollar is given a higher price. Okay, the lamai. You know when price of the product increases lamai, supply also increases according to the law of supply. Same thing happens here. Assume lamai now price of $1 equals 400 rupees. It means if you sell $1, if you have $1 Buddha, you can get 400 rupees. Then Buddha, at this point, the people who interested in selling dollars can get more benefits because higher price. So they try to sell more. They try to inject more dollars into the market now, right? So dollar supply increases. Okay, the lamai. Then if you plot these points on the diagram lamai, curve will be 1,000, 1,500, 2,000. This is dollar supply curve. Supply of dollars. Speculators, their main job is to buy and sell dollars. Especially these speculators when price of dollar in terms of Sri Lankan rupee goes up, they try to release their dollar stocks to the market. The dollar releasing dollar stocks means supply of dollars. This is supply of dollars. And remember this relationship, Lamai. When dollars are supplied, we create a demand. We create a demand for Sri Lankan rupees, Lamai. $1 supply means LKR demand for LKR. So that should be drawn here. Supply of foreign exchange here. Supply curve, demand curve separately. Here is the supply curve. Dollar supply. Now, shall we move on? Yes.
Still writing, sir.
Now let me know once you're done. Okay.
Done, sir.
Right. Remoni, Sandil, I hope you're done. Right. Then to the supply is okay. This point. Demand for dollars okay. And remember this one, Buddha. Supply of dollars in turn. Supply of dollars in turn creates a demand for Sri Lankan rupees. At the point of supplying dollars, at the point of injecting dollars to the market, Buddha, we demand Sri Lankan rupees. Very simple. Right. So that don't worry about determinants. This point need to be discussed in detail. Determinants of foreign exchange. Right. Next one. Flexible exchange rate system, determination of foreign exchange. Direct method, indirect method. This is the very critical point. Very, very critical. Right. So please, do you need a break, Lamai? Shall we have 5 minutes break, or if you don't need, we can continue? Okay, right. Take 5 minutes break and come 5:08. Right. Okay, 5:15, Lamai. By 5:15. Okay. Refresh yourself and come. Okay. Right, okay, Lamai. Shall we start? Are we there? Am I? Oh, Lamai, shall we start? Are you there? Hello? Right? Lamai, shall we start?
Okay, sir.
Okay. Sitma, Sandil, Remoni, are you there? Are you in the meeting? Hello?
Mm.
Okay. Sitma? Sitma, are you there? Shall we start to the? Right, okay, Lamai. Determination of foreign exchange rate. Page number 6. Right, this is direct method, Lamai. This is indirect method. Right. So the direct method mean price of one USD in terms of LKR, right? Price of one foreign currency in terms of domestic currency. In other words, Sudha, this is dollar market. Dollar market. Right? Demand and supply forces for dollars, US dollars. Right. This is how to label the axis with the number. This is price tamai, but how to label it? One UA price of dollar in terms of LKR. LKR. Here quantity of dollars. Quantity of dollars. Here price of one LKR. Price of one LKR in terms of USD dollars. Because indirect method mean price of domestic currency in terms of foreign currency. Okay. Here quantity of LKR. Quantity of LKR. Right. Okay. Now I look at the board. Right. This is demand curve for dollars, Lamai. Demand curve of dollars. Remember, Lamai, when we demand dollars from the market, we supply Sri Lankan rupees to the market. So, dollar demand curve or demand for dollars forces or creates a supply for Sri Lankan rupees. This is supply of Sri Lankan rupees. Supply curve LKR. LKR. Supply curve LKR. I have drawn both these curves in black color. The reason is that there is a connection between these two curves. Okay, right? Demand for American dollars, US dollars, create supply in the rupee market, right? Okay. Then I use blue color. This is supply of US dollars. When we supply US dollars to the market, we demand at the point of supplying dollars to the market, we demand Sri Lankan rupees from the market. This is demand for LKR. I think it's clear for you. Both goes same color. Right. Okay, right. Then this is the equilibrium price. Look at the board. This is equilibrium price. Assume now $1 equals 400 rupees. This is assume $1,000 are being demanded. This is quantity at 400 rupees. Rupees, yes. $1,000 are being demanded. I mean, exchange in the market. That is called equilibrium quantity. Listen, Lamai. Okay, the Lamai. Here, then we can say price of $1. $1 equals 400 LKR. 400 LKR. Indirect method, Lamai. Both are interconnected. Okay, the Lamai. But here price should be here. The price is the price of 1 LKR in terms of USD dollars. US dollars. Here price should be Lamai. I told you at the beginning. Price of indirect method is the reciprocal of direct method. It's mean the 1 over 400. Right here, 1 LKR equals 1 over 400. How much? $0.0025. Here, price of LKR in terms of dollar equals 0.0025. Both are interconnected, Lamai. Both direct and indirect methods are interconnected. I think it's clear for you. Let's say 100,000 Sri Lankan rupees are being demanded. Quantity cannot be same. Okay, because these are different quantities. Okay, this is direct and indirect. This is the determination of exchange rate based on freely floating exchange rates. Here no government intervention, Lamai. Price of US dollar and price of LKR have been determined by demand and supply forces of LKR and US dollar. Let me know once you are done. Yes, Buddha. Which one? Which part, Buddha? Demand, supply, both. Okay. Right. Sandil, what is mean by direct method, Buddha? Direct mean expressing the price value of foreign currency in terms of domestic currency, right? Expressing the value of foreign currency in terms of LKR, right? Buddha, this is demand for US dollars. Demand for US dollars. In the market, foreign exchange market, Buddha, dollars are being demanded. Take it simple way. Dollars are being demanded. This is the demand curve for dollars. When we demand dollars, Buddha, remember, we supply Sri Lankan rupees. So this is supply of Sri Lankan rupees. I told you that currency, every currency Buddha has demand and supply forces. Earlier you told LKR supply equals USD demand. Then it's the same thing. Earlier you told LKR supply equal USD demand. LKR supply, yes. LKR supply. USD demand. Isn't it represented a single graph? No, we have to draw both diagrams. Because Buddha, here there are all together how many? Look at the board. Others you can copy this down. Suddenly look at the board, Buddha. Dollars. For dollars, Buddha, there's a demand. You agree? There's a demand for dollars and also supply of dollars. This is dollar market, Lamai. Right? And also we have LKR. For LKR, we have demand and supply. Okay, Dalamai. US demand and LKR supply are interconnected. These two are interconnected. LKR demand and US dollar supply are interconnected. Did you get my point? Then Buddha, how many altogether, how many curves are there? Two demand curves, and also they are different. Nilamai. This is demand for dollars. Sorry, like LKR, that is demand for US dollars. So we can't show all these four curves, demand and supply curves in one diagram, Sandhi. We have to draw separate diagrams. Then I have created I have drawn two separate diagrams, demand and supply for LKR in one diagram. What is this? No, that cannot be dollar supply. Dollar supply here. This is dollar supply. This should be LKR supply, Sandhi, not dollar supply curve. Here, this is the dollar market. This is demand curve. This is supply curve. This is demand and supply of Sri Lankan rupees. Sri Lankan rupees. Okay, Dalamai. So here, demand and supply of dollars need to be drawn in one diagram. Supply and demand for LKR need to be drawn in another diagram. This is called direct method. That is called this is called direct. This is direct method. This is indirect method. Sandil, don't worry. There are some exercises with our next task is to complete these exercises. Definitely will understand this. No issue, Buddha. Just write this down. Yes, Buddha.
Then the first direct method is about supply of dollar demand. Sorry, dollar demand and dollar supply. No?
Dollar demand and supply of Sri Lankan rupees are same, interconnected.
Then the first graph.
Huh?
First graph. I mean the direct method graph.
Yes.
Then it's about LKR demand and dollar supply.
No, Buddha. This is demand. Look at this. Demand for US dollars. Can you remember, Buddha? The equilibrium price is determined by demand and supply forces. 1 minute, please. Yes. So then even though LKR supply equals US demand, the relationship exists. Must draw it in two curves. Then what is your suggestion, Sandil? it is not appropriate to draw two diagrams to show four curves, four separate curves, what is your suggestion? No, Sandil, equal mean, I think now I see the problem. Buddha, equal mean here, there is a connection. Not equal mean here, not like x equal y. No. There is a connection, Buddha. You get what I said? There is a connection, right? Not equal mean not exactly equal. There is a connection, Buddha. Equal sign mean connection there. Connection. Okay? We have to draw separate diagrams, Buddha. We have to draw separate diagrams to show it. Right.
ආසය කියන්නේ ඩොලර් එකක ප්‍රයිස් එක ඩිටර්මයින් කරනවා ඩිරෙක්ට් මෙතඩ් එකෙන්
Yes, price of one LKR is determined by LKR demand and LKR supply. Yes.
So the first graph එකේ තියෙන්නේ supply of dollars we demand of dollars we.
Yeah, demand for dollars, supply of dollars. දැන් මේකට ළමයි supply of Sri Lankan rupees දාන්න බැහැනේ. ඒක මෙහෙම තේරුම් ගන්න නැහැ ළමයි. මම කියන එකට no sense. Price of $1 is determined by
මේ direct method එකෙන් determine කරන price එකම තමයි direct indirect method එකේ.
Yes, exactly. Yes. Indirect. This is another way. Same price is determined by another method. By demand for Sri Lankan rupees and supply of LKR. Yeah, I think you got the point. That's 100% absolute correct. No problem. Shall we move on? Need more time?
Yes, sir.
No, there are some exercises, Lamai. When we complete these exercises, 100% Buddha, you get the lesson. No any problem. I'm 100% sure that all these issues, doubts will be erased by these few questions. Buddha, equal doesn't mean that, I mean, numerical they are equal, means that interconnection there. See how people misunderstand Buddha? Okay, the Lamai. Yes, very good, Buddha. If you didn't ask that question, it would have been the permanent question for the rest of the life or until maybe your exam. Let me know once you're done, Buddha. I'm waiting for your response. Amai, shall we move on? Need more time?
Done, sir.
Okay. Others,
1
Pudha?
minute, sir. Sir,
Yes.
so මේ ඉන්ටර්කනෙක්ට් වෙනවා කියලා කිව්වොත්ද ඩිමාන්ඩ් මේ LKR ඩිමාන්ඩ් එකයි ඩොලර් සප්ලයි එක
Yes.
ඒ පාට චුට්ටක් එක්ස්ප්ලেইন කරන්න.
Connection එකද?
ඔව්.
Dollar demand and Sri Lankan rupees. හරිද? ඔයා මාකට් එකට ගිහිල්ලා මම හිතන්නකෝ. හිතන්න ඔයා යනවා මොකද්ද foreign exchange market එකට ඔයා dollars ගන්න ඕනේ. ඔය dollars ගන්න එකට අපි dollars demand කරනවා කියන්නේ. Right? You go to the market and when you ask dollars for the that is called dollar demand. හරිද? ඒ කියන්නේ there is a demand for dollars. You create a demand for dollars. හරිද? දැන් ඔයාට පුළුවන්ද dollars නිකන් ගෙදර අරන් එන්න? ඔයාට පුළුවන්ද කියලා මට මේ $10,000 දෙන්න, $1,000 දෙන්න. ඔයාට demand එකක් විතරක් කරන්න බෑ. හරිද? ඔයා ඩොලර්ස් ටික ගන්න ඕනේ. ඒ කියන්නේ demand කරන්න ඕනේ රුපී දීලා මාකට් එකට. හරිද? ඒ අර that corresponding rupee amount need to be given to the market, otherwise you are not given dollars. හරිද? ඒ කියන්නේ ඔයා ඩොලර්ස් ගන්නකොට සිප්ම මාකට් එකෙන් අනිත් පැත්තට ඔයා මොකද කරන්නේ? ඒකට හරියන රුපීස් ටිකක් මාකට් එකට දෙනවා. ඒකට කියනවා ඒක රුපී දෙනවා කියන්නේ මොකද්ද ළමයි? සප්ලයි නේ. දැන් පැඩි ෆාමර් කෙනෙක් ළමයි මාකට් එකට නේද? පැඩි නේද? එයා අරන් ඇවිල්ලා දානවා කියන්නේ මොකද්ද ඒකේ අයිඩියා එක ළමයි? Paddy farmer brings paddy, seeds of paddy and brings and put into the market. That is called supply of paddy. හරිද? මේකත් එහෙම තමයි. ඔයා ඩොලර් ගෙදර අරන් එනකොට රුපීස් දීලා තමයි ගෙදර අරන් එන්නේ ඩොලර්ස් තමයි. ඒ කියන්නේ රුපී supply. Dollar when at the point of demanding dollars, you have to supply Sri Lankan rupees to the market as well. හරිද? Right. Okay. Shall we move on? Right. Right. Then Buddha, there's a nice example. I got this example. Now I've been doing this for now 2-3 batches, but I got this example from Cambridge O-level economics textbook. But very clear. And if we do this question, Buddha, I can explain everything for you. And also you will get the idea of foreign exchange, what's happening there. I will change a bit. I will change this question a bit. Okay, according to like Sri Lankan context. But anyway, good example. We'll spend much time, right? Doesn't matter, right? I think it will take 30 to 45 minutes. No, 30 minutes maximum. Okay, but don't worry about the time consumed. Try to get the idea, right? Show the effects of each of the following events. Show the effects of each of the following events on the foreign exchange market using both direct and indirect method. Okay, both direct and indirect quotation mean method, and yes, clearly indicate the shift in demand or supply curves and the resulting change in equilibrium exchange rate. First one, Sri Lankan consumers increase their imports of goods from United States. Right. Number one, before drawing graphs, number one, please understand how demand and supply forces change. I'll use the whiteboard, right? Look at the board. Right. Number one, example number one. Example number one. More imports, Sri Lankan consumers increase in imports. Imports from USA increases. Right. Now I need answers, Lamai. Huh? Tell me, Lamai, to import goods from USA, can we use Sri Lankan rupees? Yes or no? Punara?
No.
No. Then Buddha, we have to have dollars. Right? As Sri Lankans, Buddha, do we have dollars like Sri Lankan rupees? Normally we use Sri Lankan rupees. We don't have dollars. Then Buddha, we have to go to the foreign exchange market and we have to buy dollars. Buying dollars mean Buddha, we demand dollars, right? So demand for dollars increases. Demand for dollars increases. Why? Importers demand more dollars. Lama. It means demand for US dollars increases. Are you okay with this? Any problem? This is simple, Lama, not much difficult. Right. Lama, every transaction has dual impact, Lama, like accounting. Okay, Lama. In the foreign exchange market, Buddha, if you do something, right? Every transaction has two impacts, dual impacts, right? Right. Demand for dollars increases. Lamai, when you demand more dollars from the market, when you get more dollars out from the foreign exchange market, we have to supply Sri Lankan rupees, Lamai. Then supply of Sri Lankan rupee, supply of LKR, what happens, Lamai? Increases. Don't think like when one increases, other should be decreasing. No. Emekak nahi, Lamai. When we demand more Sri Lankan dollar, when we demand more dollars to import goods, Buddha, demand for dollars increase in the market. Parallelly, Buddha, we supply more rupees to the foreign exchange market. Write this down, first, Buddha. This is a first step. Is first step. Okay, the Lamai. Right. Then, Buddha, you are given the table. No, that direct and there's a box. Sorry, the table. Yes, showing direct and indirect method. Right. Buddha, before this transaction happens in the foreign exchange market, there is an equilibrium. The market should be in equilibrium, right? Before this transaction happen, right? Now draw the original equilibrium situation, Lamai. Direct, indirect. Direct, indirect. Direct. This is the original equilibrium in the market, Lamai. This is dollar market. Quantity of dollars. Q dollars of dollars. Price, Lamai. $1, value of $1 in terms of LKR. Okay, the Lamai. Right. This is demand for dollars. This is supply of dollars. This is the original equilibrium price, Lamai. But I'm not going to put the values for quantity. I'll just name it as Q1. So that now price assume 250 rupees. What does it mean, Buddha? $1 equals 250 LKR. This is the original equilibrium price because every market should be at the equilibrium first. Right? This is direct method. Then Buddha, indirect method. Indirect method mean rupee market. Demand and supply for rupee market. ළමයි මේ මෙහෙක මෙහෙම හිතන්න එපා හරිද? මෙහෙම දැන් foreign exchange market එක කියලා එකක් තියෙනවා. ඒකේ නේද අර දැන් කාය මොනවාද මේ in the the normal market පුතා there is a separate shops or separate the selling centers for fish. another selling centers or the shop for books. Okay ද ළමයි. එතකොට ඔයා හිතන්න එපා මේකේ මේ ඩොලර්ස් වලට වෙනම මේම එකක් තියෙනවා. හරිද? මෙහෙම පොඩි අර එහෙම ෂොප් එකක් තියෙනවා. ඔයාට US මොනවාද එහෙම ඒවා නෑ ළමයි. separately මෙහෙම ඒවා නෑ ළමයි practically අරගෙන අපි අර physically you can't see these places ළමයි. Right? This is the dollar market. මේක තමයි රුපී මාකට් එක. මේක තමයි ස්ටර්ලින් එහෙම ඒවා නෑ ළමයි. You get the point? To explain this theory point very simple way Buddha, even though we discuss this correct, these are 100% correct. I mean we can't see physically these separate markets lamai. Did you get the point lamai? Because market mean any place Buddha, any place, any mechanism, right? Any mechanism, that's a good word. Any mechanism where buyers and sellers meet together, or this exchange is exchange takes place. You get my point? Okay the lamai, right? Indirect mean with the price of 1 LKR in terms of US. This is demand for LKR. This is supply of LKR. So that this value should be, I mean there should be a connection here. Buddha, how much? Here I'll put Q1, no problem. Here how much? Buddha, here how much the price? How to calculate? 1 over 250. How much? 0.004 dollars. Here price is Buddha 0.004. This is the original market equilibrium, Lama. Now look at the board, Lama, please. Yes. I'll give you time to write it down, Buddha. Look at the board. Due to this transaction, right? Sitma, tell me what happens to demand for dollars, Buddha? What happens? Increases. Buddha, when demand increases, Punana, tell me what happens to demand curve?
Shifts to the right.
Shift to the right side. So dollar demand curve, Lamai, shifts to the right side like this. This is new dollar demand curve. Okay, the Lamai. When dollar demand curve shift to the right side, something else happened at the same time. Supply of LKR increases, right? This is LKR market. Sandil, tell me, LKR supply increases. Then when supply increases, what happens to supply curve? When supply increases, supply curve shift. When supply increases, Sandil, shift to the left. Supply increases, Buddha. Right side. Okay. So this is supply curve shift to the right side. Supply curve shift to the right side. This is LKR, supply of LKR, LKR supply, shift to the right side. Now look at the board, Lama. Now you can see Buddha equilibrium price has changed. Equilibrium price means Buddha exchange rate. Now this is the place where new demand and supply curve intersect. This is the price. Now what happens to price of $1 in terms of Sri Lankan rupees, Lama? Has it increased or decreased? Increase, Lama. Assume it's 300 rupees. Now, Lama, price of one USD dollar in terms of LKR has increased. When this increase, what happens to Sri Lankan rupee value? The price of LKR in terms of dollars, Lama. Now, Buddha, the rate should be 1 over 300. 1 over 300. How much the value? $0.003. That's why, Lama, this rate has decreased. Okay, the Lamai. This has gone up to 300. In the indirect method, in the rupee market, Buddha, that value has decreased. Are you okay with this? Any problem?
Yes, sir.
Okay, right. ඉතින් ඕකට තමයි මැරෙන්න හදන්නේ ළමයි. මේකට කියන මොකක් කියලාද ළමයි? ශ්‍රී ලංකන් Yeah, this is called Sri Lanka, the depreciating Sri Lankan rupee, lamai, domestic currency. Why? Now, lamai, before this transaction happened, value of one LKR is $0.004 in terms of dollars. Simple idea, Buddha. If 1 rupee is given to the market, we can get $0.04. Now, only $0.03 from the market. This means, Buddha, our value in the in terms of dollar has decreased. That is called Sri Lankan rupee depreciation. That's what I mean it's happening right now. This is the one of the reasons, Buddha. If we import more goods from USA, or if we demand more dollars from the market, Buddha, this is what happens. Dollar demand for dollar increases, that rate increases. On the other hand, the price of LKR in terms of USD falls. This is called rupee depreciation of currency. This is the exact reason for this the current situation, Buddha. Due to this higher oil prices in the oil market, world oil market, Buddha, the crude oil market prices now there's a reduction. I'm talking about few weeks back. Situation few weeks back. Price of crude oil was really high. Then we had to pay more dollars, Buddha. We had to pay more. We had to have more dollars. Then Sri Lankan government and other importers demanded more dollars. When the demand for dollars increases, lamai, demand curve shifts to right side, result in higher price. Government can't stop that, lamai. Government is not responsible. This is a demand and supply, lamai. Yeah, there is an interconnection. It's another story. Are connected. Government can control, but it's just a natural, lamai. When export, imports, investments. Okay, the lamai. What else? Especially this geopolitics, situation change. Foreign exchange, also foreign exchange market demand and supply change, causing appreciation and depreciation. Simple. Okay, the lamai. Right. Shall we move on? Second one. What is second one? Second transaction. Foreign demand for Sri Lankan tea increases. Right. Buddha, before draw the diagram, shall we before we draw the diagram, shall we analyze the impacts on demand and supply, Lama? Okay, the Lama. Right. Second. Right. Before Lama, okay, right. Then what happened due to this transaction? Second one is foreign demand for Sri Lankan tea. Second transaction, demand for Ceylon tea, Sri Lankan tea increases now. Look at the board, Lamai. What happens here? Now, Lamai, USA people want to buy more tea from Sri Lanka. Buddha, when purchasing products from Sri Lanka, they have to pay in Sri Lankan rupees. Okay, the Lamai. They don't have Sri Lankan rupees, Lamai. Then what do they have to do? They have to go to the foreign exchange market and demand. So that is all transaction now happen online, something else, right? Sometimes we don't want to go to the foreign exchange market physically, Buddha. We can buy these dollars and everything online, no problem, right? This is what actually happens in the market, right? Right. Demand for Sri Lankan tea. Now, Buddha, they have to buy more Sri Lankan rupees to buy tea from Sri Lanka. Then, Buddha, they have to demand more. Then demand for Sri Lankan LKR increase. Demand for LKR. Demand for LKR. What is the reason, Buddha? The foreigners need more Sri Lankan rupees to buy products from Sri Lanka. Then someone might say, sir, they can pay in dollars, no problem, because dollar is the most, commonly accepted and, well recognized currency in the world. So they can pay in dollars. We can accept. We can receive the payment in dollars. Yeah, it's okay. But can you use dollars in Sri Lanka, Lama? You have to convert these dollars into Sri Lankan rupees. When you convert these dollars you got from USA into Sri Lankan rupees, Buddha, what do? You go to the market and ask in Sri Lankan rupees, Lama. Then what happens? Demand for LKR increases. And what happens? I told you that every transaction has two sides to that. Then what happens? When you demand LKR, I need LKR, give me LKR, I'll give you dollars to the market. Americans say, I need Sri Lankan rupees, this is dollars. Dollars are supplied to the market now, right? So supply of dollars, supply of US dollars increases. Did you get what I said, Lama? Now Buddha, draw the original demand and supply, because before this transaction happens, market is in equilibrium. Direct, and indirect. This is dollar market. Price of, remember Lamai, this is really important, especially labeling axes Lamai. It's very critical point. Okay, the Lamai. They closely, look at labeling axes, right? Because you should have good understanding to label axes properly. Don't just put price and quantity, Lamai. No. It's something else, right? USD, 1 USD in terms of LKR. This is demand. This is Q of quantity of dollars. This is demand for US dollars. This is supply of US. This is original equilibrium. Assume Buddha now 250 rupees. 1 USD equals 250 LKR. Indirect method. Quantity of what? LKR. This is supply of LKR, Lama. Supply of LKR. This is demand for LKR. This is the prevailing equilibrium price, Lama. Assume quantity Q1. Here, Lama, price should be 1 over 250. It means 0.004. Here, price of 1 LKR in dollars. Right. Now, Lama, look at the board. Kunara, demand for LKR increases. Demand for LKR, LKR market. This is the LKR demand and supply. Kunara, what happens? The demand for LKR increases. What happens to demand for LKR curve?
Shift to the right.
Shift to the right side. LKR demand curve, shift to the right side. This is new demand curve for LKR. Then supply of US dollars. This is dollar market. Direct. Direct CET. Right. Direct, what happens? Supply increases. Sandeep, Remoni, when supply increases, what happens to US? Supply of US dollar increases. Then supply curve shift to the right side. This is new supply curve of dollars. S2 dollars. Shift to the right side. Now what happens, Lamai? Change, the rate changes, right? This is the new value. Assume Buddha is 200 rupees. 200 rupees. Now you can see the value, the price of $1 in terms of Sri Lankan rupee has decreased. This is called appreciation of currency. Okay, it's mean now we can buy one US dollar by paying only 200 rupees. We are much stronger now, right? In this market, Buddha, this value is greater than 0. Here, Buddha, assume I told you 200 rupees. Here at the beginning, 1 LKR equals 0.004 dollars. Now, 1 LKR equals 0.005 dollars. No, sorry. Yes, right? 1 over 200 lamai. 1 over 200 means 0.005. Okay, the lamai. This is the rate. This means rupee, has become stronger. Now our, value of one domestic currency in terms of US dollar is 0.05. If we give 1 rupee is given to the market, Buddha, we can buy $0.05 now. Right? This is called appreciation of currency. Let's separate lesson for appreciation. Are you okay with this? Okay. Then in the news, Buddha, right? Newspapers, and media, social media, or FB or whatever, they put this final, they disclose this final value lamai. 250 or 250. ගොඩක් වෙලාට indirect method එකකින් කියන්නේ නැහැ නේ ළමයි ලංකාවේ. ගොඩක් වෙලාට direct එකනේ use කරන්නේ. Clear? ඉතින් යාලා කියන්නේ ළමයි අර 250 හරි 2 හරි final value එක තමයි. Reason, this is the logic behind this, Buddha. This is this is what happens behind the screen, behind the stage lamai. Finally we see that final value 250 or 200. Okay, the lamai. Right. Any doubt, Punara? No. Yeah. Yeah, buying and selling values lamai. But remember that the buying and selling, there's a difference, the gap between buying rate and selling rate, because that is the profit margin of these intermediaries lamai. Because commercial banks buy, assume commercial banks, one of the commercial banks purchases $1 at 300 rupees. When that same commercial bank sells that dollar to a even maybe same person lamai, commercial bank keeps a profit margin. අර ඔයාලා බැංක් එකට ගියාම ළමයි ස්ක්‍රීන් එකේ දෙකක් තියෙනවානේ, buying rate and selling rate. Okay, the ළමයි buying rate is the NER, right? That is nominal rate. The මේ graph එකේ තියෙන එක. අර selling rate එකේ යාලා පොඩි margin එකක් තියාගන්න. නැත්නම් ඉතින් යාලා transactions කරන්න ඕනේ නැහැ නේ ළමයි. Right? They do transaction expecting some profit. Most probably like small value, like less than 5 rupees lamai. Right? If buying rate is 300 rupees, selling rate might be 305 rupees. What is not clear? What to do lamai? Shall I send a photo or something? Or Sitma, can you take a screenshot and send it to the Sandil? 1 minute, I'll try.
Okay, sir.
Right. Lamai, give me 10 minutes. I'll complete the session. All right, I got it, Buddha. Right. Okay, for the other questions, you can give a try. Third one. Increase in foreign direct investment. Third one. Increase in foreign direct investment. Lamai, 1 minute please. Look at the board. Foreign direct investment. Now you know how it works, Lamai. Foreign direct investment. Assume that one American person has decided to invest in Sri Lanka. Investment is $1,000. Okay, the Lamai. Assume that man has decided to start a garment factory in Sri Lanka. Foreign direct investment, Lamai. Right? Then Buddha, when he has to bring capital or money for dollars from US to Sri Lanka. But in the Sri Lanka, Buddha, in Sri Lanka, they can't use dollars, Buddha. They have to convert because foreign direct investment, the workers work and the raw materials have to be purchased. So to make this payment, Buddha, they need to have Sri Lankan rupees. Then they have to convert this foreign direct investment of $1,000 into Sri Lankan rupees. Right? To convert this, they can't go to the Cargill supermarket, Lamai. They can't go to, Heel Super Pereira and Sons, Lamai. They have to go to the foreign exchange market. Right? Then this foreign, the investor brings $1,000 in his shoulders and go to the commercial bank. Right? Then Lamai, he asks what? I need Sri Lankan rupees. Can I have Sri Lankan rupees? Lamai, asking Sri Lankan rupees is mean demand for Sri Lankan rupees. Demand for Sri Lankan rupees. Then demand for Sri Lankan rupees, LKR, what happens, Lamai? Increases or decreases? Increases. There's a demand for LKR. Okay, the Lamai. At the point of demand in LKR, Lamai, foreign investor, right, puts $1,000 the market. Okay, the Lamai. $1,000 are being supplied. Lamai, it's mean dollar supply increases. Yeah, simultaneously at same time, dollar supply of US dollars increases. Supply of US dollar. Are you okay with this, Lamai? Then Buddha, when demand LKR demand increases, demand curve of LKR shift to the right side. I think same thing happens, right? The same what we did in same question. Sorry, the previous question should be done here. Okay, Lamai, this is up to you. Do it, Buddha. Third one. And send me a photo. Send me a photo, Lamai. After completing third one, increase in foreign direct investment, and see what happens in the two markets, Lamai, direct, I mean rupee and dollar market. So the first step is to draw the original equilibrium. Then you can make the adjustment. LKR supply increases. Yeah, correct, Sigma, no problem. Sigma, what is the 0.07? Is your assume value or
Yes, assumed one.
no, you can't assume Buddha. If you put 200 in the direct method, how much the value should be in the indirect method? 1 over 200. There should be a connection, Sigma.
Okay.
Okay, 250 0.05 එක හරි අරක එහෙම කැමති එකක් දාන්න බෑ. මෙයා 200 නම් අතන 1 over 200. ඒ කියන්නේ 0.05. නේද? Right. Punara. Yes, good. Put the quantity of dollars. First diagram direct method. Other one quantity of I'm talking about horizontal axis, quantity of LKR. Direct method, quantity of US dollars. Others are okay, no problem. Now, can you complete other questions as homework? Fourth one, fifth one. From 6 onwards, they are a bit complicated. Give a try. If you can send me them, Buddha, I'll make a conclusion. Sorry, make a comment on your answers. Right, 6th one. International oil prices increase significantly. How does it affect Sri Lanka? Foreign exchange market. Government must repay a large amount of foreign debt. This means the Sri Lanka has to pay more foreign debt in Sri Lanka dollars. Simple idea with the dollar demand for dollars increases, right? Next one, interest rates in Sri Lanka increase sharply relative to other countries. This is for your thinking, Lamai. Right? If this happens, this means that the Sri Lankan banks or, let's say Sri Lankan banks offer higher interest rates to foreigners than other countries. Okay, the Lamai. Then think on that. Next one, government imposes strict import restrictions, tariff and all. 10th one, Sri Lanka experiences a boom in tourism earnings. Okay, the Lamai. You will try to complete these 5 transactions and 2 more. Fourth one is increase in remittances from Sri Lankan workers. So, it means we receive more dollars from our relatives, Lamai, working in other countries. Fifth one, Sri Lankans invest more abroad. Let's say that Dhammika Pereira has decided to, make an investment in USA, Lamai. And Dhammika Pereira needs finally dollars, right? Rupees cannot be brought into the USA, Lamai, right? So Dhammika Pereira has to convert Sri Lankan rupees, what he has, into dollars, Lamai. Then Dhammika Pereira has to go to foreign exchange market to demand US dollars. When US dollars are being demanded, Buddha, Dhammika Pereira has to supply Sri Lankan rupees to the market. Okay, the same story. Same story.
Sir,
Yes, Daru.
need more dollars mean
Huh?
demand for dollar increase.
Sorry?
Need more dollars means demand for dollars
Yes,
increase.
of course, yes. Need more dollars mean demand. Oh yeah, demand increases for dollars mean we need more dollars. Okay, the lamai, right. Sandil, 300. Yeah, good. Yes, very good. No problem. Right, Remoni, I hope you are done. Okay, right. Oil prices. Okay, Buddha, that's enough today. Let's do it next day. Lamai was probably I will be able to do a class in this week with the Thursday morning. I'll let you know the time and exact date. Most probably Wednesday, so Thursday. If I can do a class with, I will be able to complete the considerable part of this due. Right. I wanted to complete up to this point today, merits and demerits of up to this point, but my performance is always, lower than I expect, Lama. Right? Right. If you have understood the lesson, Buddha, if you have got something, that's my pleasure. No problem. Right. Okay, that's enough today. See you next day. Sandil, I saw Sandil had sent 2024 A-level paper answers for 2020. Others also can send. I got printouts also. I'll start markings and send marks as well. Others also can do. Right. Okay, Lamai. See you next day. Bye. Thank you for coming.
Thank you, sir. Bye.
Bye bye.
Thank you. Say goodbye.
Record.